Hi, welcome to the Market Alert for Thursday, the 2nd of November 2023. So the Fed remained paused, acknowledges that what they're doing is doing a great job again. And of course, this is bullish for stocks. So stocks and bonds ramp on dovish data, quarterly refunding and comments from Powell. Stocks gained after soft data and dovish reaction to Powell's press conference. Economic news for today. Let's have a quick look. We've got Bank of England today, rates to remain unchanged. I suspect they'll follow the lead from the US and do exactly that. Bailey to speak at 12:30, and then unemployment and all of the war news has disappeared. So again, it seems like it's going to be a bullish day for stocks. Also, the implied volatility is pointing in this direction now. As you can see, we're down to 12.58 from the recent high of 16.29. And I just saw a headline that JP Morgan have turned bullish. Not that you can believe any of that, but an interesting one that they throw out there now and again. So yeah, the implieds pull back, and the move to the upside looks like it's set to continue. It's not unusual this time of year. We start off with the end of October, November for the Santa rally, and of course the bonuses, and now of course the cap's been removed in the UK, or is about to be removed for bonuses. So work it out yourself what's likely to happen. Okay, let's move on, have a look at the markets and see what the Dow and all of the others did yesterday, and finish off with the metals. So in the Dow, what a surprise, we traded up to the 33,292 that we marked up yesterday. We just got above it, but we're just back below it slightly on the overnight. So we're just below yesterday's high, which is hidden behind the economic news at the moment. And we've got the close there where we've seen a bit of resistance. But yesterday the market just trading below the DP at the psychological level. Then the market moved up at lunchtime, and then in the evening we had a further rally to the upside before the market actually closed there. In the German DAX, similar thing here, trading up to the 20 bar moving average. We've got the market down slightly. It's already traded above yesterday's high though in the German DAX. There's the high just above the close there yesterday. So morning down to the DP. We then see some demand coming in, and then the market moving higher, consolidating through the afternoon, and then the evening following the Dow there. In the S&P 500, trading up to the 89% retracement. It's traded above the high, but it's got the 20 moving average in its way there. 30-minute chart, again, we're near the close and high, rounding off a bit there at the moment. And then again yesterday afternoon, moving up from the open, and then up after Powell spoke at 7:30. In the UK, well, a bit more sanguine here, still stuck in a sideways range, no doubt waiting for Bailey to speak later today at 12:30. We'll then see a reaction to rates being unchanged, and no doubt it'll be the same rhetoric of what we're doing is working fine. Yesterday the market was lower, traded down to the low, the market found support, and then it was vertical from there. We had a pullback in the afternoon initially, and then continued on following the Dow on the electronic market. We've already traded to the high, and we're now currently sitting at the close. In the US dollar, a bit sideways there, as Powell said that everything's dovish. We're okay, everything's doing fine. So the dollar pulling back a bit there, still above the 20 bar moving average though. And in the metals market, silver stuck in a sideways range, waiting to be hammered to the downside. I suspect that'll start from today. And the 30-minute chart also showing the market struggling with yesterday's close. You can see we're up on the news and then down on Powell, and then back up before the end of the trading session. But like I say, this, again, gold down below $2,000, ready to be hammered to the downside, and the same with the gold market in the 30-minute chart as well. As the stocks move higher, gold and silver will be pummeled to the downside once more. Quick look at the gold-silver ratio before we finish. And again, you can see that we've got a bit of red there for silver. And why do I keep saying that they're going to hammer it down? Well, we've got two wars at the moment, and the prices are still rising irrespective of the manipulated data. Still inflation around, and yet the price of silver is still 50% or 60% cheaper than it was in 79, 2011. So I think it's pretty obvious, isn't it, where the next move is going to be, and that's to the downside. And this, as I said before, the gold-silver ratio heading back up to that 100 level, or 92 to start with, and then 96, and then we have 1 to 125 as well. So you can see we've got an uptrend here, and just a matter of breaking out from that there to then continue on up and sell silver back down to around between $20 and $17 an ounce. Okay, that's it for this one. Let's see what Bailey does today, see if he's got the courage to increase rates or leave them alone. I suspect the latter. We'll just wait and see. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.